Greetings, fellow taxpayers. Well, once again, the tax season is upon us, as evidenced by the abundance of filing services being offered to assist us with filing our taxes, something many of you will resort to using. But how do you know whether you accomplish the filing yourself or you pay someone to do it for you, that it will be done to the letter of the law, and that you will pay only that amount of tax you are required to pay? Did you or do you know if your tax preparer read the applicable sections of the more than 13,000 pages of tax code and the more than 300 updates added to it since January of 2012? Did you or do you know if your tax preparer made appropriate reference to the 60,000 plus pages of applicable rules, regulations, and court interpretations to either accomplish or confirm your filing results? Or did you do, as too many people do, and assume that as long as the tax and the filing fee is within your means to pay and the IRS does not come calling later, then you're satisfied? If that be so, then that is a sad statement on we the people. To what honor does such complacency extend to those who gave so much and sometimes all to eliminate similar effects of subjugation imposed from without that we have by our passivity allowed to evolve from within? Since there are so many Americans satisfied with the results of their tax filings and the billions of dollars they forfeit annually through filing errors and tax compliance fees, then perhaps it is appropriate to examine exactly what the real consequences can be in the tax filing process. I will do this by presenting the results of 8 tests conducted by CNN Money Magazine during the period 1987 to 1997. Yes, these tests are dated. But when they were conducted, the tax code and its supporting rules, regulations, and court interpretations were less than half what they have evolved to today. Thus, the results can be just as real now as they were then, perhaps even worse. To conduct the tests, Money Magazine assembled tax experts that prepared a filing example and then determined what they believed to be the correct amount of taxes due. Notice I said believed rather than they determined the absolute correct amount. The reason why accuracy is called into question is because tax laws are far too often ambiguous and subject to interpretation for differing sets of conditions. In some cases, different paths may be employed, as we will see in one result shortly, that could arrive at an acceptable answer, but with a widely varying tax consequence. The important point for you is this. In every case, your tax filing is at the end of a trail of interpretations, some made by you, some by the IRS, others by the courts, and still others made by those that trained your tax preparer before he interpreted your taxes for you. To get a broad picture of the field of tax preparation, the test included national accounting firms, regional accounting firms, nationally franchised tax preparation services, and independent agents, who together comprised a test group of more than 40 participants. In each of the test years, the accounting firms and tax preparers participating in that year received the exact same filing example. So, what were the results? Interestingly, but not surprisingly, in 7 of the 8 annual tests, no 2 tax preparers of the many tested arrived at the same exact answer. In 3 of the 8 years of testing, every preparer had some mathematical error, the most dramatic occurring in 1990. Think about the effect of those errors. Unless they are caught before you file, you may overpay your taxes, thus penalizing yourself. Or if caught by the IRS for an underpayment, then you again may be monetarily penalized and pay interest on the balance due as well. Here then are the results of the 8 annual tests compiled into one chart for you to see and compare. In the first column, I have listed the tax filing year for which the test was conducted. The next column, labeled Preparer's Results, reflects the range of answers, that is, the amount of taxes that were determined to be due by the individual tax preparers for the same tax example. The third column is the percent difference between the lowest and highest result in the previous column. And the last column reflects the range of service fees the preparers would have charged you to complete the tax filing for the same example. Note, the smallest margin of error came in 1987 with a difference of 65%, between the low figure of $7,202 due and the high figure of $11,881 due. Look too at the last column to see that it would have cost you another $187 to $2,500 in tax compliance fees to have your taxes incorrectly figured, thus subjecting you to the under or overpayment penalties I addressed earlier. Let me add that for this specific tax test, the nationally franchised and independent agent preparation services provided the closest answers to the magazine's expert answer. The larger firms were either more conservative or overly aggressive in their results, leaving one with the conclusion that the more you paid in compliance fees, the more likely you were to be penalized by errors. The most dramatic result for all the tests occurred for tax year 1990. Here you can see a difference that ranged from $6,807 to $73,247 in taxes due. That's a difference of 976%. The magazine noted that only one tax preparer arrived at a correct answer, that being $16,786, a figure nearly $2,000 less than the magazine's expert, who also correctly figured the example, but with a result of $18,724. How could both be right? By choosing two different paths, but not incorrect paths, to address one of the components in the test example. The path the magazine expert chose would have penalized the taxpayer almost $2,000 in overpayments because of the ambiguity of the code specific to the issue. The gross error in 1990 of $73,247 was traced to an underexperienced preparer, while the $6,807 figure was arrived at by an experienced preparer that admittedly relied too much on memory to properly complete the test. Adding further to the sad reality of all these test results were those test questions posed to the IRS representatives who, more often than not, responded with different answers to the same question. These tests clearly demonstrated then, as they would likely demonstrate now, that the tax system is incomprehensible, thus making every American subject to sanctions and penalties for violation of law that neither they, their tax preparers, nor those who enforce the tax code can understand and comply with accordingly. Fellow taxpayers, there is a simpler method for government to collect tax revenues, one that eliminates every element of tax preparation error that has penalized you in the past and that absolutely will penalize you again in the future. That simpler method is the fair tax. The fair tax will replace all income, payroll, self-employment, capital gains, estate, gift, and corporate taxes with a single national sales tax on all new products and services. With the fair tax, we will go from a tax system with thousands of error-prone steps to a one-step, comprehensible, highly accurate process that will never again require you to file an individual tax return. I encourage you to go to www.fairtax.org and learn for yourself what the fair tax can do for you, your family, and our nation. And I also encourage you to read the fair tax legislation now before Congress by going to www.thomas.gov. Select on the homepage bill number in the indicated spot and type in HR 25. It will take you less time to read this critically important piece of legislation than you will likely devote to filing your taxes this year. I'm Kerry Bowers, and I greatly thank you for your attention to this message.